Welcome back to Financial Strategies with Andrew Adjemi in Connecticut and Daniel Adjemi in Colorado.
Yesterday, I was talking to Jim, and I was looking at his portfolio, giving him a free second opinion on what's going on, doing an MRI on his finances. I said, "Hey, Jim, you've got $500,000 here, and I'm just wondering, are you consider yourself a conservative investor or aggressive?" He said, "Conservative." And Jim, what percentage of your money do you think should be at risk at this point in time in the stock market? He said, "Well, I think maybe only about 10%, Andrew." And as I looked at those assets, I said, "Jim, when looking at your assets, do you understand how much you actually have at risk in the stock market right now?" And he said, "Well, I don't really know, but I hope that I have, only 10% at risk." I said, "Well, actually, Jim, you're actually upside down and you have 90% at risk in the stock market." And I said, "Is that really what you want?" He said, "Well, Andrew, when I was talking to my big name company investment guy, he said, 'Do you want to make money?' And I said, 'Yeah, I want to make money. I've been having my money in CDs and there's no good CD rates anymore.' So he said, 'Well, then I'm going to help you make some money.' And he ended up putting that money of Jim's into the stock market." I said, "Well, Jim, did you realize that in all investments, if you take a teeter-totter and you divide it in three categories of aggressive, moderate, and conservative, and you then take each one of those categories and divide them down into the same categories, did you know that there's things in the aggressive end that you can put your money in the conservative end that goes that you can make money when the stock market goes up, but not lose any money. You can still make money without putting your money at risk." He said, "Well, Andrew, that's what I want. I don't want to put my money at risk. I don't want to lose principal, and I don't want to lose purchasing power." I'm Andrew Adjemi.
And I'm Daniel Adjemi, and you're listening to Financial Strategies. That's a good story. That's something that people forget all about a lot of times. That there's more than the bank, which we learned you're actually losing money by having it in. And the stock market, there's a whole universe of other alternative investments that people can participate in. It's kind of a lost art, right? It became a difficult thing for professionals to do.
Yeah, that's right.
A difficult talent, because basically if you bought stocks for the last, 30 years, 25 years, or you bought government bonds for that same period of time, you made a ton of money.
Right.
And people forgot how to do other things. Well, now we're in this weird period of time where if rates go up, stocks like Apple, like these big long duration stocks, are going to come down. Wow. Or if they go up and you're in government bonds, your rate will go up, but your account value will come down. And so now we're in this spot where there's this lost art of investing in other types of things, and it's time to know how to invest in other types of things, right?
Exactly. More than ever. And unfortunately, there's too many companies out there right now that just go back to that, the old shtick that they've been in line with all the time. It's either, if there's no CDs, like in the case of Jim here, there's no CDs available. So then we got to put it in all these other bond funds, and we'll put some in the S&P 500 and this kind of thing. But there's nothing new under the sun when you're talking to these big companies, because that's what they have. And all the guys and gals that knew how to do, individual bonds and annuities and CDs and these kinds of things, they're not around anymore. They don't know how to do it anymore, because what the companies have been teaching is just to, it's a mutual fund. The answer is a mutual fund. Whether you want commodities, it's a commodity mutual fund. You want, bonds, it's a bond mutual fund. You want small cap, it's a small cap mutual fund. And there's other things, individual bonds are a whole big different thing that people can make still. People can make, 2, 3, 4, 5%, depending how we're able to buy those things. So there's a universe of options out there that people need to be aware of.
Well, when you bring up those bonds, people might say, well, I heard bonds were a bad thing. Government bonds have just made people a ton of money over this period of time, like over the last 20 years. You made a ton of money if you were in government bonds. But now, like, rates are at this spot, and I don't think that you can make money in that anymore. And when you're talking about bonds, you're talking about good corporate bonds that you can earn some interest in. But
That's
when
right.
you talk about active management with these kinds of things, you're not just talking about buying a fund that you're going to earn 3.5%, 4% on. You're talking about where you see a security, you see a bond that has the wrong price tag on it, and you purchase that. So you buy it under par, and it gives you optionality. We love optionality here. And you're talking about when you, like, in April of last year, March, April of last year, there was things to be had that had good, solid balance sheets. You look at instead of buying a fund that just owns everything, you look at particular securities that have good fundamentals, good, solid balance sheets that are trading at a discount. And then you ride that thing up and make maybe 25% when it comes back to par. You collected some interest in the meantime. Now, if it didn't go the way you thought and it didn't come up right away, on maturity that it will come up. So in this case, because everything came back, these things came up above par way faster than anyone expected, which means you're sitting on this capital appreciation of 25%. You collected your 7% dividend, and now you have a good problem, right?
Yes.
It's paying 2% now or whatever, and you get to sell this, take that appreciation, and go into the next opportunity. But that's what you get when you're actively managing the stuff, compared to just putting it into a wrapper, like you're talking about, a fund, where the best you could do is what? If it crashes, maybe you could ride it up, but if it doesn't, you're just doing whatever it does. And if you have stuff default inside of it because no one's really checking the underlying fundamentals, they're just buying a basket, then it doesn't throw you off too much because it's got a million things in there, but you never make anything either.
Daniel, you're not passionate about this stuff, are you? Yeah, that's what I'm talking about, Daniel. You got it, man. It's not about the individual items, the individual investments that count. It's about how you deal with them and the strategies behind it. That's why you're listening to Financial Strategies with Andrew and Daniel Adjemi. And today's topic is a guaranteed way to lose money. The bank is a guaranteed way. Just investing at a low interest rate is a guaranteed way to lose money, not staying ahead of inflation, not staying ahead of taxation. Want to let you know in our listening audience that we have a piece to go with today's show, Universe of Income Generating Investments, and you can have that by calling 800-725-7616. So listen, folks in our audience, don't try this at home. We have been on the air now for about at least 9 months, 10 months, somewhere in that vicinity, I think. And we've had people calling in wanting to know, well, how do you do this? What do you do? And, it's not something that we can teach you how to do because we have years of experience behind us and experience as well as education to be able to do it. And there have been people calling up, well, how does that work? And every time I try to explain it to them, they've got something that comes against that. But the point here is it's not just the investments, it's not just the bonds or the safe annuities or the preferreds or whatever that's key. It's how you use them. That's key. It's thinking 7 moves ahead, like a good a chess player, thinking 7 moves ahead to be able to manipulate not only the investments, but the accounts as far as, if you have IRAs, converting to Roth IRAs so that you have less taxation in the future when it comes time for required minimum distributions. There's just so many ins and outs. There's life insurance that you can use to be able, and I'm not talking about death insurance, I'm talking about life insurance, life that can be used for people to put them in a place that they would never be before, having tax-free income in retirement that's generating 3 to 4% potentially tax-free, which the taxable equivalent of that's closer to 5-6% or so. So there's some excellent alternatives that's available to you and our listening audience if you're interested in those. And we've been giving away different books. We've been giving away different white papers. And commission reports to be able to explain these things to you. You can listen to our podcasts, that, various shows that we've had in the past, agemy.com, AGEMY.com. You can go to hear our other radio shows and view our other radio shows, as well as any place that you get podcasts from. We're glad to be able to teach you and educate you on how you can be a better steward of your money, how you can be prepared for the things that are coming ahead, rather than having to just do what everybody's been doing all the other times. We want to greet you on this Easter Resurrection weekend. Hope you're having a great one and relaxing and enjoying it, and wanted to help you to be good stewards of your money. We have a companion piece to go along with today's show called The 7 Risks to Your Retirement that I'd love to be able to put in your hand. And you can have that by calling 800-725-7616. We also have the book by Howard Marks, The Most Important Thing. When you're looking at your money and investing your money, the most important thing. We'd love to be able to educate you. If you want to try this at home, well, you got to read. You got to read and get experience from other people that know how to do that, and love to put that in your hand. To the next 5 callers, you can have the book, The Most Important Thing, to 800-725-7616. 800-725-7616. And we'll be right back after this.
History tells us the market goes up and the market goes down. What would you do if you lost half of your retirement savings? It's time to make the shift to steady, reliable retirement income. And where do you go? The Retirement Income Store. Log on to agemy.com for your free retirement review. That's AGEMY.com. The Retirement Income Store, where retirees go for income.